Okay, hi guys, I hope you are doing well. Thank you very much for joining in on this second day of the AFM live revision session. What we are going to do today is that we are going to be talking about the different again, just like what I did in the previous class. I actually went about discussing one of the past examination questions, and I would be adapting the same approach for the session of tomorrow also, for the session of today also. So let's actually start off discussing. Basically, I've opened up the ACCA CB practice platform, and in front of me is the ACCA CB practice platform. On this specific platform, what I would do is that I would want to actually start off with the latest past examination question and to take you people through uh, discussing the different topics that are covered up in this latest examination paper. As you know that there are multiple variants of the paper that are published. So again, some of you get a different paper, some of you get a different paper, but anyways. So in front of me right now is the AFM September-December 2023 examination paper. And what I'm actually going to do is that we already did this question number one, which was about the McKeever company. This specific question of McKeever company required us, I repeat, this specific question of McKeever company actually required us to calculate the cash flows, etc. For a project which is going to be based in a foreign country. So we actually did this question in our previous class. Now I'm actually going to move forward and I'm going to discuss further the other two questions which are pertaining to this specific paper, and we would go about it. So you can see this specific question number two, which says the following exhibits available on the left hand side of the screen provide information relevant to the question. There is a detail about Southmed Restaurant, and then what happens is that there is this summarized financial statements, Southmed Restaurant plus the summarized financial statements. For the Southmed summarized financial statement for year ending so and so, the information should be used to answer the question requirement. Now, what exactly are the requirements of the question? It says evaluate Southmed's financial performance and business situation. You should indicate in your discussion any omissions in the data provided where further information would be helpful to extend your analysis. Provide relevant calculation of ratios and trends to support your evaluation. 10 marks are available for the calculation and obviously 10 marks for discussion. So you see, this is one of those questions that is basically a question which nobody is usually prepared for with respect to the AFM exam. Now, why is that so? The reason behind that is we are always thinking about that we would get a question on the investment appraisal, or we would get a question on the mergers and acquisition, or we would get a question on this restructuring, etc. But generally, we are not expecting a performance evaluation question. So this question actually asks for the performance evaluation, and what we are going to do is that we are going to be talking about the performance evaluation through this specific scenario. Now, what I would actually want to do is that I would want to go about this specific exhibit pertaining to this company, and we would then take things forward. So what is the relevant information? Let's try to understand this. So it says Southmed Restaurants is a chain of restaurant operating operating in the country of, okay boss, this is basically September December 2000, this is examination question from September December 2023, and this is question number 2. The name of the question is Southmed Company. The name of the question is Southmed Company. Now let's start off discussing about it. What does it say? It says Southmed Restaurants is a chain of restaurants operating in the country, country Pangland, specializing in southern Mediterranean food. Southmed aims to provide customers with better dining experience other than other chains offering similar food. So you need to always identify the key information with respect to question. It's a chain of restaurants. It's a chain of restaurants which is actually operating in the country of Pangland, specializing in South Mediterranean food. SouthMed aims to provide customers with a better dining experience than other chains offering similar food. So what do they want to do? They want to give customer better dining experience. That's what their target is. With more comfortable seating and stylish surroundings. So they want to give comfortable seating and stylish surroundings. Sourcing of food and drink from supplier is organized by a central procurement function acting on orders from restaurants. Restaurants, however, have some discretion. Restaurants have some discretion in the prices they charge in response to the local business conditions and also in their staffing policy. So restaurants have a authority that they can decide the prices on their own. They have the authority that they can do the staffing on their own. For the purpose of segmental reporting, SouthMed divides its restaurant into three segments. The six largest cities in Pangland, tourist centers, mostly coastal locations, and the third one of them is smaller cities and towns. SouthMed's board is currently reviewing its strategic positioning and financing. What was the requirement of the question? That you have to actually, you should indicate in your discussion so and so, so and so. You have to evaluate the financial performance and you have to evaluate the business situation. Now, SouthMed's board is currently reviewing its strategic positioning and financing. The directors wish to ensure as far as possible that SouthMed will have sufficient finance to sustain investment and keep shareholders happy by maintaining dividend levels. So they want to, they will have sufficient finance to sustain investment, and keep shareholders happy by maintaining dividend level. This we view as a significant competitive threat, the growth of more expensive restaurants, offering higher quality food and better surroundings than SouthMed does, particularly in the six largest cities in Pangland. About 5 years ago, SouthMed expanded the number of restaurants it had in tourist centers in response to campaign by Pangaland's government aiming to increase the number of holiday taken in Pangland. Board has been pleased with the results of these restaurants, but there is considerable competition now, particularly from restaurants which serve high customer numbers at cheaper prices. So there is a price war also in the tourist location. SouthMed's board wishes to assess its current business situation based on the figures in its most recent financials before deciding on how to respond to the competitive threats the company faces and how the response should be financed. So now the summarized financial statements are given. The summarized financial statements are given. There's a lot of detail in there. There's a lot of detail in there. Can you people take a screenshot here? Can you people take a screenshot because I want you to spend 5 minutes time on your own. Can you take a screenshot of this extract? Now this extract. Now this extract. And now this. Now what is the requirement of the question again? You have to actually evaluate the financial performance and the business situation. There are 10 marks for the ratios and the trends to support your evaluation. Now I'm giving you 5 minutes. Just think about whatever you can do. Just think about whatever you can do on this specific scenario. I'm giving you 5 minutes to do this. Yeah, please let me know what's the update, to what extent have you covered up. Okay, go ahead. Take your time. I'm waiting for 2-3 minutes. Okay, let's start off. So basically, what am I gonna do? If I have to actually start off with this, the first thing that I will do is that I will just copy everything that is here. I'll copy everything that is here. Remember, there are 10 marks for the calculations. And what do you need to know? You need to actually tell the business position, and there are two requirements that you have. I will just open the response option, which is the spreadsheet option. What I've done is that whatever was there, I've just copied it and I've pasted onto the spreadsheet. I've pasted it onto the spreadsheet, right? Okay. Now let's just start off and let's just see that what we could do. So what we could do is that we could actually try to calculate the trend also. I mean, the first thing that we could try to do is that we could try to calculate the trend. How do we calculate the trend? Trend, trend. 2000 x1, 2000 x2. In fact, let's make it like this: 2000 x1. So basically, what are you gonna do for 2002? You would just say that this is 120,900 minus this divided by this. Similarly, for 2001, it is going to be a bit different. I just copied the formula and I just pasted it. So it's like 2001 figure minus 2000 x0 figure divided by 2000 x0 figures. So we get the trend calculations. Now I'll just convert this into the percentage and I'll just change the font about it. Let's say I make it 30 in the font. So we get the trend, right? So we get the trend. Wheresoever you have to actually copy and paste it, you could just copy paste it. Like I want to know the trend about the market price also, I did that. I wanted to know the trend about, okay, so what am I gonna do? I'm gonna say okay here and here. Nahin. Okay, I'll just repeat what I've done. I'll just repeat what I've done. I simply tried to calculate that what is the change in 2022 x2. So the simple formula was here. I simply did this. I said bracket open. This is 2000 x2 minus 2000 x1 divided by 2000 x1. So I get the percentage. The same formula is copied here. So it's like the same pattern. And then what I did was I simply copied this formula here and I just went about. I just went about going down, 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 doing all the calculations. So since it is not Excel, you just cannot hit the enter button and get things done. You have to paste it. I've just pasted everything. Maybe everything is not relevant. Few things are relevant, few things are not relevant. This is about profit and loss. Current assets, non-current assets, total assets, the equity, this is where the changes, current liabilities, market price change is given. Then we have got this change of 6 largest cities, revenue by cities. Then what happens is that you've got gross profit, the number of restaurants, so on and so forth, right? So we have got all these changes. Now, I'm trying to do this because I wanted to actually there was a need for the trend. So it says you have to evaluate the performance and you have to evaluate the business situation. We need to talk about the performance and the business situation. Now, so we have been able to do this calculation of what we have been able to do the calculations of these all these trends. Again, I need to actually tell them about the financial performance and the business situation. So we'll see that what is happening. So let's try to see if we could calculate some ratios calculations. Say ratios calculations. Now let's try to do. The industry's figures with respect to the gross profit margin is given. Operating profit margin figures is given. Gearing figure is given. So let's try to calculate these ratios for them also. The non-current liabilities divided by non-current liabilities plus market value of equity. So if I say gross profit margin, the gross profit margin is gonna be what? Is gonna be gross profit divided by sales. Gross profit divided by sales. The operating profit margin is gonna be operating profit divided by sales. Then the gearing percentage. How have they established gearing? It's like a non-current liabilities divided by non-current liabilities plus market value of equity. Okay. So it's gonna be bracket open. What's the non-current liabilities here? Divide by bracket open non-current liabilities plus market value of equity. How would you get this? This is 10,000 shares multiply by, you have the market price per equity share. So it's like 32.542, etc., etc. I'll just convert this all into the percentage. So this is what the ratios calculations are gonna be, the gross profit margin and etc., etc., etc. And this is what you get. Okay. So we have been able to calculate gross profit margin also. Okay, I'll just repeat the gearing calculation. See, he has given to you the formula, non-current liabilities divided by non-current liabilities plus market value of equity. He has given you the formula. How would I do it? I would do it like this. I would say non-current liability is this 23,400 divided by non-current liability plus number of shares multiply by market value of each share. And once you have done this, you could just copy this to the multiple years also, right? Okay. And now you could just apply the trend here also. That what's the trend with respect to the gross profit margin, operating profit margin, and the gearing percentage. So you could apply the trend also. Now let's move a bit forward and let's discuss further. With respect to financial position, we can establish different type of ratios also. Revenue is done, cost of sale is there, gross profit is there, dividends are there. We have calculated gearing ratio. We have the non-current assets, current assets. Okay, we can calculate. See, there are multiple ratios that you can calculate. There are ratios with respect to financial performance. In fact, what I would do is that I would just write it down here. Financial performance and then financial position. So for the financial performance, you could calculate the profitability ratios majorly. For the financial position, you could calculate liquidity ratios. You could calculate the gearing ratios. You could calculate the gearing ratios. You could calculate the liquidity ratios. So these are the major things, right? If we talk about the business situation, you could try to calculate the operating gearing also. That's what you could just do. So the profitability ratios are there, the gearing ratio is there. I would actually add up more ratios. I would see if I could do something for liquidity. So I'd say current ratio. Say current ratio. How do you get it? Current asset divided by current liability. Current assets divided by current liability. Quick ratio, which we also call asset test ratio. How do we establish that quick ratio or asset test ratio? Try to see this. The quick ratio of the asset test ratio is like this. You've got the current assets minus the inventories. Has he given to us anything inventories? Divided by current liability. Now you would say, how did you get it? The examiner is giving us this information that other current assets include inventory. Other current assets include inventory. So I'll just try to see if I could just. This is what is happening with the current ratio and the quick ratio. Okay, what else can we calculate? The gearing is already calculated. So you could do the calculation of interest cover. You could calculate the dividend yield also. Because I want to strike a balance between the different categories of the ratios. The interest cover is gonna be what? PBIT. PBIT is your operating profit. Divided by interest cost. Obviously, the answer is gonna be negative because the finance cost over there is negative. So I converted this into this. So it's like 3.20 times. It's like 3.20 times. Right? So this is how it is, the interest cover. Let's talk a bit about the dividend cover also. Let's talk a bit about the dividend yield also. What is the formula for dividend yield? The formula for the dividend yield is, okay, I would rather write down the formula over here also. Interest cover is PBIT upon interest. The dividend yield is dividend divided by market value of share. So it is actually going to be what? You need to know the dividends. The dividends are here 3000 divided by market value of equity. The market value of equity is what? The ordinary shares multiply by the market price. So this is the dividend yield, which is the return that you provide to the shareholders on the basis of market value of the shares. Now, just try to see how this is actually going on, what is happening. So just look at the picture here. Revenue, it was decreasing by zero point 0.3, now it's decreasing by an increasing rate. Cost of sale is increasing, the gross profit is decreasing. Operating profit is decreasing a lot. Finance cost, it's improving. Profit before tax is decreasing, profit after tax is decreasing. The dividends have remained unchanged. So the overall performance over here that is actually appearing is okay. The calculations for the different ratios and trends have been performed in the spreadsheet. The calculations for the different ratios and the trends have been performed in the spreadsheet. From the spreadsheet, it is evident that over time the revenues and also the profits are decreasing. The revenue was decreasing at a rate of 0.3% in 2000 X1, and its revised rate for 2000 X2 was its revised rate for 2000 X2 was 0.5%. Its revised rate for 2000 X2 was 0.5%. That's what the revised rate for 2000 X2 was. Okay. So basically, um, this is basically decreasing at a rate of 0.3% and a revised rate for was 2.5% decline. The expenses are increasing and the resulting impact is that the profit after tax for the year is now decreasing at a rate of 14.6% in 2000 X2 as compared to 7.7% in 2000 X1. If we evaluate this a bit further, the revenue decline is mainly caused by a reduction in sales at the largest cities. Additionally, the gross profit, the gross profits at these largest cities have suffered significantly, causing causing an overall decline in the profits of the business. The tourist centers have performed well, but the increased cost at the largest cities have outweighed the gains at the tourist centers. Um, you cannot see word, you can see word, but you cannot see the full of it. Okay, now see what is happening is that we have got the industry figures of gross profit margin percentage, operating profit margin percentage, and the gearing percentage. If you could go about comparing it with this company, their gross profit is reducing by this, their operating profit is reducing by this. If I could just take these figures for the gross profit, for the operating profit. Okay, I could say that GP, it was minus 4.5% and now minus 2.9%. The operating profit is minus 14.4%, minus 8.2%. If you look at what is happening in the industry, sorry, these are the relevant figures. 2.6, 2.6, 4%. The gross profit margins are decreasing at a rate of 4% in 2000 X2 compared with the industry decline at a rate of 2.6%. The operating profit margin is reducing at a rate of 14% in 2000 X2 and 7.9% in 2000 X1 compared to the industry figures of decline of 5.8% and 4.4%. This is overall suggesting that the performance of the business is not good, and this is evident from the deteriorating current ratio and the quick ratio, that is the liquidity position of the business. So the liquidity position of the business is deteriorating. So the overall conclusion is that the financial position is deteriorating and the business situation, financial position and the business situation is such that business is facing severe challenges from the competitors, especially in the areas that it has been performing very well, right? So you would have to actually suggest all these. Do you think that you have got additional pointers? Anyone think that you have got more additional pointers than this? Yeah, is that okay? Anyone else has got any suggestions in here? Yeah, anyone else has got any suggestions in here? Okay, yes, you could mention about the dividends that the entity has maintained their dividends, and while it has maintained the dividends, the result of maintaining the dividends is that the dividend yield is increasing. Why? Because the market value is decreasing, so dividend yield is increasing. But again, it's mainly the financial position and the business situation. Right? Okay, so we are done with this specific question, which was a past examination question from the December 2023 examination. Okay, so we are done with this. Now there is something that I want to do. I want to actually have a bit of a discussion with you people. That what is your current status right now? What is the areas that you are struggling with? What are the areas you are struggling with? What are the issues that you're having, and how do you plan to actually cover up the remaining days? Do let me know, please. Yeah, please, if I can have some inputs from you, that what is your status right now? Anyone could randomly, you could unmute if you want to unmute. You could just message whatever that suits, because okay, my practice is too fast. Okay, Jamshed, I'm sorry, you could have told me earlier, I would have slowed down a bit. Okay, Vibor, okay, hedging is going to be coming in, is struggling with the WAC area. Okay, Atib. Okay, WAC, the mergers acquisition, the restructuring, the currency risk management, and the interest rate risk management. These are the topics for the next 4 sessions. So currency, okay, yield curve would be covered in the restructuring area, don't worry. Currency, interest rate, mergers acquisition, and restructuring. These are the 4 questions that are lined up, right? Okay, so now the recordings will be made available to you people. They are being made available on my channels. Oh yes, 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 Jamshid Khan. Just remind me. In fact, I'll just write it down also, but remind me. I'll just cover it up in the coming class. The BSOP, there is a past examination question on it. We'll cover it up. So, what my suggestion to you all is going to be right now that just try to do maximum examination questions and just, I mean, like, try to attempt 6 examination questions on the CB platform. That is going to be enough for you to pass the paper, inshallah. For those who are struggling with WAC, it will be covered up in the class of the restructuring. For the report based question, the next question number 1 that we would do, you would get the idea that how it is going to be answered. That is going to be in the coming class, inshallah. Right? Okay. So thank you guys. And the recordings are made available on my channel and they're also made available on the scriber's website. So you can access them. The best approach is to read the examiner's answer and take a pointers out of it. That's the best approach for the theory. Plus, do you have the notes? Do you have the notes of the AP AFM? I have shared some notes also. Do you have them? Okay. Are you part of any WhatsApp group? Okay, I'll just be sharing in the WhatsApp group and but I will ask my team to actually add you people into the WhatsApp group so that we could just share it. Don't worry about it. We'll just be doing it tonight. Right? Okay. Thank you all. Thank you guys.